Hello friends, have you ever noticed what is the conundrum of buy and hold with popular stocks? Popular stocks like HDFC Bank, Reliance, Asian Paints and all these stocks. Many of these stocks don't move for years together. Sometimes 1 year, sometimes 2 years, sometimes 3 years, sometimes even 7 to 10 years. So let's see how these stocks have performed over the last 3 years. We've done this study from November 21 to November 24 and found that these 5 stocks, which are supposedly the highest quality stocks, have underperformed the Nifty in a very big way. Reliance is up 12% in this period, Infosys is up 4%, Levers is up 2%, Bajaj Finance is down 12%, and Asian Paints is down a whopping 24%, even while Nifty went up by more than 30%. So I'm not saying these stocks are bad or these sectors will not do well or they will not do well in the future, but you can see the uncertainty of it all. There can be stocks which will discount the future in 1 year, and for the next 8 years, it may not give you the price performance. That may happen. The concentration of the stock moves can happen in very small periods with people holding on to those stocks at the top end for years together, losing out the opportunity cost in the market for their money. The solution to all this, as we have found, is to ride with momentum. Riding with momentum means finding stocks that are currently with high momentum and riding them till the momentum is there with those stocks and exiting them once the momentum fades. Within the Nifty 50 itself, we identified 5 stocks that were riding with high momentum, and those are Bajaj Auto, Trent, Bharat Electronics, NTPC, and Mahindra and Mahindra. In the same time period of November 21 to November 24, these 5 stocks performed phenomenally well. While Nifty was up 30%, Trent was up 471%, Bharat Electronics was up 280%, Mahindra 198%, NTPC 182%, and Bajaj Auto 161%. That is the kind of outperformance the same set of stocks within the Nifty can give when you look at the momentum scores. So the pertinent question is how to know if the stocks that you hold have momentum in them or not. What is their momentum score? The idea being that even if you're holding stocks that can do well in the future, are currently not optimizing for the opportunity cost of your money. So given this thesis, won't it be better if all stocks in our portfolio were with high momentum scores? If we have high momentum stocks, we are likely that our entire portfolio will continue to perform till the point these momentum stocks are there in the portfolio. Most investors never come to know what they're holding, whether they should keep holding, whether they should exit, whether they should add more, which stocks to add more. And this conundrum continues in their mind till some event happens and maybe the stocks drop a lot, or we just basically go along with hearsay. To find a solution for all these problems, we are coming out with a new product called the Weekend Investing Portfolio Momentum Report. So what does this tool do? It will give you the momentum score of your portfolio. What does it mean? It means that it will calculate the momentum score of each of your stocks and how much weight of that stock is there in your portfolio, and overall give you a snapshot of whether your portfolio has a high momentum score or a low momentum score, which stocks are pulling it down, which stocks are keeping it up, and what action you may take. The momentum score of your portfolio will show what percentage of your portfolio is having high momentum, what percentage of your portfolio is having weakness in terms of momentum. So overall, it will give you a sense of the health of your portfolio from a momentum perspective. It will also give you the momentum strength distribution, how many stocks are doing well, how many stocks are doing poorer, so that you are able to readjust your portfolio according to the report. It will also give you the portfolio weightage skew. So if your portfolio is skewed towards a concentrated allocation, it will also tell you if you are skewed towards a particular stock or a particular allocation, which may be a big risk to your overall diversification of your portfolio. So why is a high momentum score important? High momentum score is important so that your money does not get wasted in loss of opportunity by staying in stocks that are not moving. Your money is deployed in stocks that have relative strength. So the stocks are actually showing that they can perform better than the market, and that is in your portfolio. And it also ensures that your money is deployed in the leaders of the market today. So the leaders of the market will have high momentum score, and that's where your money should be deployed. We made it extremely easy for you to access this report. Just go to momentumreport.weekendinvesting.com and you'll be able to get the report for your portfolio. On going through to momentumreport.weekendinvesting.com, you will come to a new page which will have an analyze button. You press that button and it will ask you for the stocks that you hold and the number of each stock that you hold. Once you enter that, it will create the portfolio for you. Once you have submitted all your stocks, submit the report, give your email there, and a report will come to you within a few minutes detailing the entire stock momentum scores, your portfolio score, your strength distribution, and any concentration risk if you have. So let's do an exercise. Let's take two portfolios and check their momentum score. The first portfolio has Reliance, Infosys, Bajaj Finance, Hindustan Levers, and Asian Paints. The portfolio's momentum score has come out to be 22. Rather poor, I would say. It also shows that 4 out of 5 stocks are in extremely weak momentum score basis, and only one stock is doing good amongst those 5. It also analyzes the portfolio construction, and it shows you that this portfolio is heavily skewed towards Bajaj Finance, which is more than 42% of its weight, and it tells you about the risks of having that concentration. The report will also showcase the overall market segment that the portfolio is skewed towards. In this case, it is all large caps. It will also tell you the industries towards which your portfolio is distributed over. Now let's look at the momentum score for a portfolio B. This portfolio has Trent, Bharat Electronics, Mahindra Mahindra, NTPC, and Bajaj Auto. The portfolio momentum report here is a score of 86. Just see the difference between those 5 stocks in portfolio A with a momentum score of 22. In terms of the momentum strength distribution, it is showing 1 stock at average momentum and 4 stocks in very strong momentum category. The composition of this portfolio is also quite even. All 5 stocks have similar weightages in this portfolio. So we can see these two portfolios, A and B. In one, you had a momentum score of 22. In the other, you had a momentum score of 86. Which do you think is performing better? In one, you had a concentration risk in terms of Bajaj Finance having 42% allocation. In the other, you had equal weights, almost 20% across those 5 stocks. In one, you had 4 stocks which were in poor momentum, and in the other, you had 4 stocks which were in higher momentum or strong momentum. So you can see that by having an analysis of your portfolio, you will be able to see which parts of your portfolio may need a relook, which parts of your portfolio may continue in the current form. And by using this report every now and then, you will be able to see the health of your portfolio in a snapshot.